All right, I'd like to welcome everyone to the trade findings and adjustments for Tuesday, the 26th of February. Glad to have I got 13 of you here tonight. My pleasure to be here with you, and I'm excited to go through a couple trades that I'm looking at and a couple reasons why I'm going to place a trade that'll be in the money to start off. So with that said, give me an update. Tell me your feelings about the market right now. What are your thought processes? What are your feelings about the market right now? I see one that says feels good. I see one that says aggravating. I see one that feels toppy and one that says it can't hold its gains. So it's kind of funny. I'm going to call that 3-1, right? Feels good, aggravating, toppy. It can't hold its gains. 3 that say it's not looking good. 1 that says he loves it. um, I'll be honest with you. Who said tough? I'm going to agree with Lance. It seems like it not only cannot hold its gains, but it's acting as a market would act at a top. So I'm going to go ahead and say, to me, it feels toppy. If I can go ahead and steal Lance's comment there. And really, the toppiness for me comes from the fact that it really just can't seem to hold those gains. And because it can't seem to hold those gains, it feels toppy. Shocked we weren't up 250 on Friday. Yesterday wasn't all that impressive. Couldn't hold anything yesterday. Obviously, it wasn't at the lows of the day, but it didn't hold any gain at all. A couple comments have come in. It seems like headline risk still rule our markets. Any wind can blow any direction, just something to spark a stampede. Currently good for pure speculators that can generate news. We also have one that says ripe for a big pullback. Now, why would you say ripe for a big pullback? What makes this market ripe for a big pullback? China and the Fed. Well, China and the Fed are working in our favor. If anything, China would be hey, it's going to get a deal done and we're off to resistance or off to new highs, excuse me. If you were to ask me about the Fed, Powell seemed and sounded very accommodating today. We'll finish up tomorrow, but I don't see a problem with the Fed right now. I don't see a problem with the Fed at all, actually, to be honest with you. Um, I would not agree with that statement. But it has been a reason for a pullback in the past. Any hiccup or sneeze from China, and we will be in a little bit of trouble. If the Fed does raise rates, or even if they were to lower rates, it could send our market into a tailspin. So I guess I'm better understanding as I think about that just a little bit more there, Abraham. I meant that those are the factors that can provoke a stampede. I do not see anything else that to have a large term effect. Got it. I think of last year. What happened last year in February that did not happen this year? Gave up all of our gains and then some. It's a correction, a pullback, 10% pullback, right? I guess it shows that past history doesn't guarantee future results, but it feels like we're repeating a lot of last year. And I don't know how to say it other than just be looking at a chart, and it might be pushed out in time a little bit. But yes, we feel toppy. We feel stagnant. We feel like there's no news or no catalysts to move us to the upside. In fact, a Brexit, China talks, in all honesty, it seems like any spark or headline is going to push people to sell off. I'm saying that even as right now, I am running just stock positions doing nothing more than following the trend. I've actually made pretty good money doing at the money or slightly out of the money protective puts through earnings. So I'm doing okay right now. But my little spider senses, right? My spider senses are telling me, hey, be prepared for a bit of a pullback. Be prepared when it drops. I want short calls to cover the cost of long puts because it'll be a quick, vicious drop, most likely a lot like last year, where we're going to lose 10% in the blink of an eye and start to build up from there. So I'm preparing for that. Past history, I'm going to learn from. I'm not going to erase it. I'm not going to say, oh, that can't happen again. I'm going to prepare for what happened in the past and be ready for this time around. Not a prediction, just me watching the market with the purpose. So, with that said, if I'm looking at trades, probably going to be bullish in nature to follow the trend, the market trend, right? But I want some or a little protection. So what do you think I'm going to do? What do you think I'm going to do if I'm going to look for a trend here? Look for a little protection. What do you think I'm going to do? And it's funny because none of you 15 know. I'm asking you to read my mind. A lot of people always ask, well, I want to know what you do. I want to know why you do what you do. Here's your opportunity. Here's why I'm doing what I'm doing. Why do you think I'm going to do what I'm going to do here? Abraham, if you see the VIX going up, you might buy some SPX long puts. I could do some portfolio protection, but I'm actually talking about a specific trade right now. Because you guys are here for specific trades, I'm imagining. I'm even letting you know it's bullish. What am I going to do that might give me that little bit of protection? I'm actually have done pretty good because remember, we've booked profit on Disney. We booked profit twice now on Nvidia. Not a lot of profit. There's one other one I had that I've done okay. Oh, I guess the short answer is I can book a little profit on the Under Armour bull put. And these were bull calls, and this was a bull put after earnings on a dangling on a dangling long put. So, in all honesty, kind of simple. I'm looking for something that's in the money. In all honesty, I am looking for something I can trade in that is going to be an in the money position. Primarily a bull call. And so if I'm looking for that little bit of protection, right? For the little downside protection, I would do in the money bull calls. Easy to adjust. I just need a couple weeks to go. Anyone see how quickly Jeffrey made sure you guys would say, hey, as we're talking Boeing, Apple, and Caterpillar or NVIDIA. There are four that are there. There were four bull call, four opportunities yesterday for in the money bull call positions. And I did think it was funny because, in all honesty, we had Boeing. My big push was Apple. My second was NVIDIA. And then he wanted Caterpillar. And, of course, Caterpillar got blasted. So kind of funny. So what were we looking at? Pretty simple. We were looking at nothing more than Boeing was the first one we were looking at. And just looking at a chart, it is a little overbought. So if you were looking at Boeing, where would your in the money be? Just looking at a chart. Just looking at a chart, where would your in the money be? 425 because of that little gap. That's a good, I would buy that, Stuart. That makes sense. But if it was in the money at 425, you're only at 426.77. So Stuart obviously has unbelievable risk tolerance because he's like, $426 stock. I'm going to go in the money by like a 1/6%, and I'm protected. Stuart, I don't have I'm more conservative than Stuart is. Stuart's like, Kevin, you got to go big to win big. In all honesty, I see a bounce off of 400. I know that's going to have some kind of in the money value. We had a gap up to 400. I would probably put my longs at 400 and my shorts at 405 or 410. I would need the numbers to speak to me. I would need the numbers to tell me where I would put the money to work. And remember, is the risk to the upside and having the stock market run away from you? Or is the risk to the downside? Where's the risk in our market right now? Is it to the upside or the downside? It's definitely to the downside. It's kind of funny because we held off and 3 downsides came in. It's definitely to the downside. It's to the downside because we're seeing our markets, for all intents and purposes, approach some new all-time highs. Kevin, you've been overbought for a month. Another reason where I've got to expect a bit of a pullback. So I'm looking to do something in the money. If I took a look at Boeing, I said I'd let the numbers talk to me. Let's let the numbers talk to us. Let's go to Boeing. Boeing. Next earnings is on the 24th. So I'm actually, another piece of the puzzle, 424. It's something that I'm going to let run and try to catch a pre-earnings run up. So let's see where I might go. Is it going to be worth my while? You have a 400 at 435 to 425. That's interesting. Kind of a pretty big spread there. But if I could get the 415, that means 5 risks for 1 reward, 85 cents to the upside. Try to get out with 40, 45 cents, that 85 cents. That'd be 450 bucks. Not bad. I could push it up to 410, but not worth it. 810, not worth it. So what if we went out 1 extra week? Geez, just the same as the March 22nd. Don't go out. Well, you could go out 1 extra week at the same price. So maybe I would do a March 29th. Same price, have 1 extra week for things to work for me. Or you could go to 385 going out to April. 385 as a midpoint. 385 for a midpoint. At 405 to 426.60, I've got a $21.60 drop. Let me find my calculator here. My trusty calculadora. Where's my calculator? I lost my calculator. Guess I'm going to use the phone calculator, right? Or my phone is. 385. I'm sorry. 2160 divided by 426.60. That gives me a 5% drop in the stock. and I'm still able to make my full return. A 5% drop in the stock, and I'm still able to make my maximum profit with a probability at 73.67%. Now, Caterpillar was a 70% yesterday. But boy, I really like the way this one sets up. I really like, if we were to look at Boeing, this would be one that, for all intents and purposes, Boeing's a winner. Boeing's one that I really like this opportunity. And I really like the setup. Shift print screen, that's why it's not going. Come on. Sorry guys, I can't control my So I like where that one sits. That one's probably your best one. Now there's another one that I'm currently in that I took some off, took some on. In all honesty, I really like NVIDIA right here. NVIDIA, I've taken 2 on and off now, different account, but I now have NVIDIA $1 cheaper than when I got in. So I could bump this right back down to $5 to get into an in-the-money bull call. Everyone can hear me okay? All right, good. I had someone just type in they couldn't hear me. So trying to help her out. All right, so let's see where I'm going to go with this one. Oh, I need to get NVIDIA up. NVIDIA is right back down to some lows. NVIDIA is right down there at that 157 range where I might expect a bounce up. And if you look, it's not going to be a big one. In fact, if I can shorten this down to only 3 months, I am playing a short-term trend on NVIDIA. Last time it got down to 155, popped up to 165. Last time it got down to 155, popped up to 163. It'll be a quick short-term trade. I would only do a couple of contracts. And I'm going to give myself a bunch of time for this to come back. I'm going to give myself the ability to have some money and dollar cost average. If I was looking at where I'd want to start this position, I'm not really changing anything. I'm doing the same position. $160, $175, but I'm looking to do it for a cost basis around $195. Analysis. Maximum profit's not there. Probability for a loss doesn't look good. Probability for any profit is only 36%. But one risk for two rewards. And again, I'm only trying to make a couple $100 on it. I'm really only trying to make the bounce from where it's at, 157 up to 163. That's it. It looks enticing to me. I also looked at Apple. Same position, same trade. But again, I want to give myself some cushion. So I took a look at Apple. What was I doing on this one? I was not that one. I think it was right here. A little bit more difficult, but again, it's for me, I was looking at it at 435 the other day. 435. What I don't like about Apple is if you look at a chart, it's somewhat topping out. You don't have that on NVIDIA. It just seems to be topping out at a pivot point at 175.54, awfully close to overbought. It doesn't stay overbought at all. But I like the setup. I like the way where it just needs to move a little bit for me to keep this in the money. It's a theta decay. It's a time decay. And this one in particular, giving me $7, and $7 divided by 174 is a 4% drop on the stock, and I'm okay. Snapshot analysis, probability for maximum profit, 75.9%. I know this is theoretical data. All it's saying is if you did this order, and by the way, I would only do Apple with probably 4, knowing I might have to dollar cost average into it. But I would definitely be looking at this one as an opportunity, giving me 4% downside protection. The best one has still been Boeing, right? The best one has still been Boeing, but this one does give me a nice maximum profit probability. And the neat thing about this one, it is only a 3-week trade, March 22nd. What was the last one? Oh, Caterpillar. Poor Jeffrey on Caterpillar, but Caterpillar could still hold. If I was looking at Caterpillar, it'd be that 135. It held it today. So probably looking at a 130, 135, 382. 382, the problem is the snapshot analysis on this one dropped it from like a 78% down to a 63%. You're using 135, which it's about $3 higher. $3 divided by, I'm just going to call it 138, is 2.1%. So this has the lowest downside protection for you, but you do have a bit of a cushion and the fact that it had a big drop today that extended hours. It's actually up in after hours. So it's deadly to say this, but Caterpillar is holding a support level. Now, support levels do get broken all the time, but if you look at a chart, Caterpillar is holding a support level, and you might wait a day or two for Caterpillar to test that level and prove that it's going to hold it. But they were downgraded, came right down and touched that 200-day, so that support level is the 200-day. I just don't know if they've been above it long enough to reset some orders to be, buy orders down there. In fact, it hasn't been long enough for institutions to put in buy orders, so that 200-day is support today on previous orders, but it should not be one that'll hold support for a period of time. So in all honesty, I just talked myself out of the Caterpillar trade. Pretty easy to do that, pretty easy to see that, but an easy way to talk myself out of that Caterpillar trade. With that said, any questions? Any questions on some trade findings and the need to give yourself a buffer, to do something in the money, to protect yourself just a bit there so that you don't lose your shorts on it? Any questions about what I'm trying to explain to you tonight on going in the money and having that protect you? If not, I'm going to wish you guys a good night. I appreciate you being here. Hopefully this was helpful. Thursday, I may or may not be able to do this, which means I will send out a link to a pre-recorded class. But here's some wonderful opportunities you have where you can see inside my head, and where I'm obviously a lot more conservative than Stuart is. Stuart's the man. In fact, he's doing a trade right now on Heinz that I kind of cringed at, but he's showing me how to make it work. With that said, guys, appreciate you being here tonight. Thursday, I'll let you know which one I did. I am most likely looking at probably Boeing. Boeing gives me a comfort. I've got a huge downside opportunity there where I'm not too worried about it. I'm most likely looking at Boeing and trying to just get this to go, to get out of to expire, to go in the money and have it expire for my full profit. You guys have a good evening. Talk to you on Thursday, or I will have a pre-recorded class that you guys can watch ahead of time. Have a good evening. Look forward to seeing you in the near future, and good night.